In business, it's quite common for cash discounts to be given. So as a business, we buy and sell goods and services on credit. So sometimes customers buy from us on credit, and then what we do is we issue them what's called a sales invoice. Sometimes we buy from suppliers on credit, and they'll issue us some stock and then give us a document called a purchase invoice. So what might happen is on the invoice it might come with what's called credit terms. So as you can see in this case, the terms are 5-30 and -60. So we need to interpret these. So the first two numbers represent the discount period. So the first number represents the percentage discount given, and the second number represents the number of days for the discount to be valid. In this case, looking at the timeline, we've got the date of the credit sale. From there to 30 days later, if it's paid by the business, they'll get a 5% discount. The second number, N/60, represents the due date. So in this case, that's the number of days before the account must be paid, and after that date it's overdue, and in this case that's 60 days. So the business, if they bought on credit, they've got 30 days to get a 5% discount and 60 days in total to pay back the full invoice. Looking at some examples, if we had 2-10N30, we'd get a 2% discount if we paid in 10 days, otherwise final payments due in 30 days. 5-14N-30, that would be a 5% discount in 14 days with final payment due after 30. And then 10% would be paid back within 10% discount if we pay back within 30 days, and then a net 60-day payment term. Why do businesses offer cash discounts is a theory question we might be expected to answer. So it's good business practice to help encourage debtors to pay on time. It should reduce the length of time on average it takes debtors to pay because they've got an incentive to pay back quicker in order to get the discount. It reduces the chance that debtors won't pay their account. That's called a bad debt. And it might actually be a marketing technique where you can increase total sales by marketing your business as somewhere where customers can get a discount for paying quickly. However, it does come with some disadvantages. So we've got less cash being received from debtors. That'll reduce our cash inflows. So if someone owed us $2,000 and we only accepted $1,500 and gave them a discount for the rest, we've basically lost $500. It'll actually decrease our net profit, as we'll learn when we give a discount that's an expense. And just important to remember, we can both give and receive discounts. So as a business, if we give one to a customer, that's called a discount expense, and we'll define that as a discount given to debtors which reduces the amount they have to pay to settle their account. Now we'll enter that in the cash receipts journal because when debtors pay us back, that's where it goes. So we might as well record our expense in there as well. When a supplier gives us a discount, that's called a discount revenue. So that's a discount received from creditors to reduce the amount the firm has to pay. And we'll enter that one in our cash payments journal because that's where we'll record all payments to creditors.